Hello traders and welcome on the new year 2022. Today is Monday, January 3rd, 2022. Let's take a look at the Forex calendar first. First day of the trading of the new year. Looks quite busy, especially during the London session. We got the PMI manufacturing data from all over the Eurozone: Spain, Italy, France, Germany, and of course the Eurozone itself. During the New York session, we got ISM manufacturing data scheduled for release quarter to 4, and then at 4 o'clock construction spending. At 11 p.m. We got the PMI manufacturing data from Australia as well. As I'm looking at this PMI data, mostly market participants expect a drop in PMI manufacturing. Not a big drop, yet still this means that the overall manufacturing data from across Eurozone rather will be slightly worse for the previous month than better. But we will see. And of course, this will have some kind of a impact on the euro related markets. So let's take a look at the euro dollar first. The euro dollar is still trading inside of this channel. As you can see, daily time frame chart is showing us that we are still continuing the downtrend, and recently we just hit the upper range zone. This range is located at the level of 1.1373. We hit this level, and last time it was last year on Friday, but on Monday we are starting on a much more negative note, and the market is a little bit red today. The next target for bulls is of course the technical resistance. This technical resistance is seen at the level of 1.1422. There is still a chance for the market to hit the level of 1.1501, and this is a game changer. This is a game changer because the market might not be any longer considered bearish but bullish if we hit this level. So of course, please keep an eye on this level. On the other hand, the nearest technical support and the range support is 1.1225. This is the technical support, but the real game changer is just down here, 1.1867, 1.1153. So this is the key long-term technical support for the market. So please pay attention to this level as well. So far, momentum is positive, but it's not that strong, only 50 points. So as we're going lower, the momentum is of course pointing to the south, and it is about to hit the level of 50 on the RSI, which is of course the neutral level. So more or less we've been hovering around this level of 50 for quite some time. So as long as we are around the level of 1.1373, this is kind of a bullish. But as far as we as soon as we go lower, like to the level of 1.13, then of course this is the neutral level. So I guess breakout below 1.1225 will trigger much more bearish reaction. So that's the euro to the dollar. Let's take a look at other markets, for Forex markets. Let's take a look at US dollar to the Canadian dollar. US dollar to the Canadian dollar is going a little bit down towards the technical support at 1.2647. This technical support, as you can see, is now the key technical support, but we can adjust our levels. There's one more technical support, which is the low of the 8th of the December 2021, which is at the level of 1.2607. So this is the technical support as well. Of course, This is kind of a similar to something, and if you know the technical analysis, you can easily see that this might be some sort of the head and shoulders pattern. We have the left shoulder, we have the head here, and now we have to make another shoulder. So we have to make a right shoulder, which might look like this, a bounce from this level, and then a breakout lower towards at least 1.2493. So please keep an eye on this pattern, head and shoulders potential pattern, building on the US dollar to the Canadian dollar. As you can see, I'm deleting the measurements of the percentage of the corrections in percents, because this is of course right now clear for everyone that this move down, a free wave move, A, B, C, maybe 1, 2, 3, 4, maybe 5 is missing. We will see. Nevertheless, this move down is completely different cycle. This is not a part of this move up from the lows of 1.2287 to the highs of the 1.2963. This move down is no longer a part of this move. This is something different going on here. So please keep an eye on the potential on the potential head and shoulders pattern on the US dollar to the Canadian dollar. If you speak about the US dollar to the Canadian dollar, let's take a look at the Japanese yen. What is going on here? And as we can see, our pattern, ABC technical pattern, is about to be invalidated, because the market is trending up and up and up, and it doesn't want to do the wave C to the downside so far. So let's take a closer look on the current situation on US dollar to the Japanese yen. The wave B might be as high as the high of the wave 5, but that extremely rare for this pair. So it looks like for this kind of corrective cycle. Nevertheless, it's still possible. So 100% market geometry A is equal to the C is violated. Let's take a look if there's any other level. 1.27 perfectly. It's been hit just to the pip. 115.37, local high 115.38, so 1 pip higher. Is that possible for the wave C to be 127% of the wave A? Of course it is. We are still waiting for the wave C to the downside. Why I'm so persistent on that? Because this is very sharp correction. It might be, of course, some sort of the ABC on the lower time frames. However, this corrective pattern, because of only 3 waves up, A, B, and C, right? It still looks much more corrective than impulsive. And I guess that a recent clear 1, 2, 3, 4, 5 waves up impulsive pattern is done. We need ABC correction. Okay, if we won't get it, if the wave B will break above the 115.52, which is the high of the wave 5, okay, then this is the correction done where the wave A is, and we got 1, 2, possible 3, 4, and 5 to the upside again. So very interesting times, very interesting levels on the market. Please keep an eye on the high of the wave 5 and on the level of 115.38, which is the 127% of the Fibonacci extension of the wave A from the bottom of the wave B, of course. So that's the US dollar to Japanese yen. And last but not least, let's take a look at some cryptocurrencies. Bitcoin. The volatility on Bitcoin is low. A recent rejection from the 51,846, as you can see here, has put the bears back into the control. We got the test of the lower level here, of the technical support on the lower level of the range, 45,429, and we have the test of this short-term golden or orange trend line. But right now there is no extension to the upside yet. So that breakout looks like a false breakout. This is the rejection, so still 51,846 is the key short-term technical resistance. Game changer is 53,228. But it looks like the negative momentum is telling us we will have another extension to the downside towards the green rectangle here, and that green rectangle is located between 39,540, 41,188. This is the key long-term demand zone for Bitcoin. Any violation of this zone means that we are starting a correction, mostly anticipated by the vast majority of the cryptocurrency traders. So please keep an eye on this zone, this technical support, and the game changers at 51,846 and 53,228. That's everything for me for today. Thank you very much for watching this analysis, and I hope I see you guys tomorrow. So take care and bye bye.